Right, we're going to get started today by looking at the S&P 500 as we usually do. You can see that we're pretty much overbought right now at a 77 on the stochastics. You can see that we're well above all moving averages, the 50-day, 100-day, and 150, and the 200-day moving average. So that's a good sign of um, momentum in the stock market. So don't be surprised if we pull back at any point in time down to one of the moving averages. That's what usually happens. Let's look at some of our talking points. All right, so first of all, let's look at where we are. We're right before a holiday, and we have a long-standing understanding that markets usually go up around holidays. So we have President's Day. And we have one more earnings report that's a major one that's coming up on next week, next Wednesday. So that might move the market up or down, and based on how NVIDIA reports the earnings. And the only other thing that's big on the horizon, we have a Fed meeting coming up in March, in the middle of March. So February has traditionally been a subpar month. We look at our average monthly stock market returns, we can see that February is less than 1% on average. And um, we have to, then after February, we have March, April, May, which usually are better months. Then these in the summertime, we usually have subpar returns for August, September, and June. We do have 4th of July, which is a well-telegraphed holiday, and a lot of people really get excited around that time, which could lead to stock market going up. So keep that in the back of your mind while you're investing. But you have to take it with a grain of salt because this doesn't always work out this way. 2 years ago, we had negative performance in December. So it's just something that most of the time works out this way. All right. Okay, so we're going to look at some of our numbers. The S&P is up 2% from last week. We have near 60% of stocks above their 200-day moving average. That's a good sign of momentum. And we have the 10-year and the 2-year Treasury unchanged from last week. So we still have an inverse correlation. We look at our 10-year Treasury to the S&P. As the 10-year Treasury has gone down in the past month or so, we've seen the U.S. market go up, the S&P 500. That's probably because as the 10-year Treasury goes up, it's an alternative to buying stocks. So if you have a 10% yielding U.S. 10-year Treasury, there's not too many people that would want to risk putting money in the stock market getting a 9% average return. So let's look at some more talking points. We have the stock market, S&P is about 54% above the 50-day moving average. That's still a sign of momentum. We have momentum in the market. If we look at our stochastics, you can see our trend line for the S&P is a straight line up for the last 2 years. And it hasn't breached, the bottom part of our channel, which is very, very bullish. And it's also a sign of momentum. Even in the bad time, it came down and basically went down to a moving average. And in the worst time last August, we saw it went down to the 150-day moving average. So that all being said, we're right in the middle right now of being overbought and oversold, basically in our trend lines, and we're overbought in our stochastics. So that means it's it could go up or down right now in the near term. Let's look at some more talking points. Okay, so oil hasn't changed since last week. We have inflation is basically unchanged around 2.7%. The dollar has been going down recently. There's some earnings reports that came out this time that companies blamed the dollar, the U.S. dollar, in as a problem for them in currency problems. So we knew that the dollar has gone up like 8%, since the last quarter. So um, I just saw something Morgan Stanley said recently. Every move up of 10% in the US dollar equals a 3% hit to S&P earnings. So now we have from Morgan Stanley a quantifiable number for the average S&P 500 company. So we knew that the dollar was up 8%. So that means that the average S&P stock would earnings would be down 2.5% from where they normally would report. So as an investor, if you see a stock sell off and because it didn't meet expectations by maybe 2.5% this quarter, you know it might be because of the dollar index and the dollar, being strong. And you just have to understand that next quarter it's going to have a 2.5% um, perhaps up. I mean, it might be improved by 2.5% if the dollar starts going down. So you have to like ignore that in general whenever you're investing because most of the stocks we're talking about they don't have control over the currency fluctuations. Okay, gold is up 2% since the last week. I just saw this little article here. Um, Gold rally driven by countries increasing hesitance to own U.S. treasuries. Okay, so all of the rhetoric and um, statements by our president about tariffs could be, and that some of the arbitrary moves by the president could be scaring other countries and central banks from putting money into U.S. treasuries. So that's not so good. And that could be leading um, the price of gold to go up because of demand. So we'll keep an eye on gold. It might be something we might want to put some money into just as a hedge of some of the weird things that are going around in the world. Okay, look at the dollar in the last couple days, like couple weeks. It's been going down. So that's going to be a tailwind that'll help most of the multinational stocks in the coming quarter. So when all the stocks report, let's say in March, they'll be saying that their earnings were helped maybe 3% by the the dollar. All right, so looking at the fear and greed index, we see that we have a little bit less fearful. Last week we had a 44, which was over here. Now we're getting a little bit past the fear. We're still fear, but whenever people are fearful, you start looking for things to buy. And let me see. So we have also the American Association of Individual Investors survey as bearish, 47%. That's almost double the bullish sentiment. So whenever the amateur investor is bearish, it's time to hold your nose, buy, or don't sell what you have. Okay, so look at the VIX. It's gone down quite a bit since the last week. It's less people are less fearful. This is like at a multi-year low, basically. So people aren't afraid of the stock market correcting, and they're not buying protection, and they're not doing things that are fearful in general. So in our emotional graph right now, I'd say we're right around here. We're fearful, but we're not in capitulation mode. And the reason why I bring this up is whenever the stock market is in despair mode, like it was like that, right around January, the end of January when we had the crisis with DeepSeek. We had despair. People sold a lot of the AI stocks off 20%. But usually, um, you want to do the opposite. When people are despair and when people are um, fearful, you want to be greedy. All right. So some of the things that could lead to a crash are AI bubble bursts. Okay, we have one report remaining for this year, one major report remaining. It's NVIDIA. They are reporting in next Wednesday. And if they have some kind of guidance, their earnings are going to be stellar, it seems, because all the major tech stocks have said they're spending and overspending on NVIDIA chips. But if their projections are they're not going to sell as many, or they have weak projections, this whole stock market will go down. And the AI stocks will go down with it. So we'll see what happens there. Um, most of the people that are coming out right now with most of the analysts now are saying that was an over hmm, it shouldn't have went down and it'll probably be helped by DeepSeek. All right, so the other things that could be a problem are random Trump tariffs being put on countries. It's hard to plan when you're a um, multinational corporation, when you're importing a lot of your goods for cost of goods sold, et cetera. And that could lead to a lack of investment in America. It could slow our economy down. So because if you're a company and you don't know if there's going to be tariffs on the steel that you make for your plant, you're going to hold off on some of your purchases. You're going to hold off on maybe building a factory or investing in your existing operations. So these random actions, we had relatively nothing done in the last couple of years of the Biden administration. But when you have uncertainty, a lot of companies don't know what to expect, and that could lead to lack of action. All right, so let's look at some more things that are talking points. Okay, our first to worst. We see that communication services are up the most this year, and that's helped a lot by Facebook. Facebook is up like 20 some percent, and um, we see information technology is one of the worst. Down, it's up 2% only this year. So the ones that are doing better are the financials, and we have healthcare up 5%, and we have materials. So materials, I think they're recently helped by the tariffs that the president put on steel and other aluminum. If you put a tariff on foreign goods, that makes um, the local producers of steel and aluminum more profitable. So they went up a lot recently, the steel manufacturers, and they'll get a lot more business too. So that could be a tailwind. Those tariffs might be helping the materials companies. And healthcare is has been down for 2 years, and they're actually compared to the S&P 500, there are probably less. I mean, they are attractively valued compared to the S&P. in throughout history. They're usually higher, have a higher valuation compared to the S&P, and and they've been down a couple years in a row. So let's see if healthcare and financials continue to do okay. All right, so let's look at we already know. Okay, so from the beginning of the year, since Trump started in the Oval Office, we had these theories that the financials will do best because of deregulation. We had lower interest rates could help real estate. That the lower real estates haven't happened a whole lot yet, but maybe as and real estate is probably one of the worst sectors so far. We have real estate only up 3% this year. Um, and the energy sector should be doing well too because of deregulation, and they'll be producing more oil. And the one problem with producing more oil, the more oil you produce, um, supply and demand shows that the price of oil goes down. So we'll see what happens there. It's really hard to invest in oil because no one has control or understands the price of oil in the future. All right, let's look at some of the sectors and stocks going up and down. Right. So we see Airbnb, they had a good earnings report. Um, if you look back at some of our stock screens for the past 2 months, we've seen Airbnb in the top 30 or so every month regularly. Um, so they have a business model where they have they don't have any inventory. They don't own the hotels. They basically serve as a broker using some servers, and they have customer service. You know, you can call and help register your vacation. So they have a very low overhead, and um, that's a very good business model to pay for servers and customer support and let the owners of the houses serve the upkeep of the hotels of a normal business. All right, so let's look at some of the other ones that have gone up. We see, okay, DoorDash is going up. We see top candy. Hold on. Wynn Resorts. Okay, our theme here is Airbnb went up. They're like a kind of a hotel-like company, and whenever one company like Airbnb goes up, all the hotel-related companies usually go up with it. It's kind of in sympathy, it's called. So Wynn Resorts, they're a hotel company, and they went up with that. Let's see if we have any other hotel companies. No, no other ones. We see, okay, the other companies that are in the top 10 are the super micro. Um, they avoided delisting, and they're starting to go back up again. And along with super micro, you have Dell, which is another maker of the infrastructure for the AI world and the servers. And you have, mm, okay, that's about it. All right, let's look at the ones that have gone down the most. We see, trying to look for a theme here. Our theme is, mm, I don't see a theme. Okay, so let's talk about some of these companies. Lululemon, they're a company that makes the yoga pants, and a lot of these companies might be hurt based on tariffs. Lululemon imports a lot of their um, products from China, so they're getting a tariff put on their goods. Let's see. Um, Procter and Gamble, they're actually affected by the dollar. So when they reported, they had a hit based on the dollar, because the dollar was going up a lot. So maybe that's why they saw a lot overseas. Procter and Gamble. Let's look at some more stocks, why they would be going down. DaVita Inc. Okay, this is a dialysis company. They do uh, work that's kind of in competition with Eli Lilly's drug, which is curing diabetes. So as there are drugs like Eli Lilly cures certain types of diabetes with their current drug. So if that happens, then demand for DaVita's um, diabetes-like services goes down. So that could this DaVita could be in a process of being disrupted. Um, One of the great things about investing is you try to find companies that constantly innovate, and even if there is a disruption, the the stocks continue to innovate and grow. So an example of that is Facebook or Meta. Meta's been up for 20 days in a row. They are continuously um, innovating and changing and evolving their company over time to adapt to competition. So let's look at some of the top gainers for the NASDAQ. All right. A lot of these companies are AI related. We have mm, Micron, they do memory chips for the AI infrastructure build out. We have Marvell Technology, they provide components for that, um, for the chips for the AI world. We have NVIDIA, of course, they're the largest manufacturer of chips for AI in the world. And the ones going down the most, well, we have AI companies here too. Applied Materials, they do semiconductor, um, they do a lot of supply for the AI semiconductor world. And ASML, they're the same kind of company. They do semiconductor supply. ARM Holdings, another company that does AI chips, and Intel. Okay, so we have a lot of companies revolving around um, chip manufacturing in the top and the bottom decliners. Um, mm, okay, that's all I can get for that. That was very interesting market movers. Let's look at the U.S. 10-year. It's been going down. So as interest rates go down, the yield of the 10-year as it goes down, we expect. Let's look at our cheat sheet. Okay, as the yields for the 10-year go down, that's positive for small caps, heavily indebted stocks, and the ones that need to borrow money. It's good for high yielding stocks because as the guaranteed yield on the 10-year goes down, then the demand for high yielding utilities, healthcare, and consumer staples goes up. Home builders will be benefiting, and speculative, non-profitable companies will go up. So let's see if that is what's manifested today in our market movers for the sectors. Let's see the change. Okay, the ones that went up the most first is oil. Um, let's see the oil. Let's look at the price of oil and see how that's doing first. The price of oil is basically unchanged. It's like maybe down a little bit. So let's see. So energy is up just a little bit today. We have home construction. That is one of the things we expected because as interest rates go down, home construction and real estate goes up. Energy, okay, let's look at a lot of the oil and gas companies pay a high dividend. Maybe that's why there's demand. Let's look at technology fund. That could be going up because of interest rates going down. Regional banking, um, they're one of the sectors that are doing well because of the new administration we've been mentioning. Let's look at in the semiconductors ETF. It's going up. All right, let's look at the ones down the most. Gold miners. Why would they be down the most? Hmm, let's look at our chart for gold. Gold has been going up 2%. So you'd figure since the last week, if the price of oil is going up, you'd think that the gold miners will be going up also. And additionally, hmm, we would also think that gold's going up too, because if there are tariffs going to be placed on oil and gas, maybe there might be on gold, other things, um, that could lead to domestic gold producers going up. Let's look at healthcare. Healthcare is going down today. They pay a dividend, so maybe there's another reason why. Um, Consumer staples, they pay a dividend, and real estate is going down. So that was a good exercise. This didn't fall within these real estate. We expected real estate to go up if the interest rates of the 10-year are going down. It didn't work out this time. Doesn't work out every time. Um, all right, let's go back to our talking points. Let's review some of Dan Now's best picks. We have ADTN. It's up 39% this year. Wow. Cisco is up 10%. And IJJ is up 2%. This is the mid-cap ETF. And KBWB, a banking ETF, is up 9%. And cash, his fifth pick, is still going to yield 4%. He has 4% in cash because he thinks at some point in time this year we're going to crash or have a big correction. So whenever there is that, whenever that happens, then he could put this 20% cash position to work. Right. And let's look at one of his picks is KBWB. That's the Invesco Bank ETF. And you can see that Citigroup is up 20% this year, and JP Morgan's up 15%, Goldman Sachs up 15%. So a lot of these companies are really taking off. Wells Fargo up, and they're helped. And the reason why a lot of them had low PE ratios to begin with, like some of them were like 7 to 10 PE. They all pay a dividend, and they all benefit from deregulation. There's going to be deal making, IPOs, takeovers, and it's also considered safe environment. A lot of their business is in America, so they're not affected as much by the tariffs. You don't have steel input whenever you're banking. You just have um, currency issues whenever you're dealing with other countries. All right, so let's look at the IJJ. This is not one of my favorites. Um, these are stocks I'm not really familiar with, but they're basically, the IJJ is not doing very well. That's a um, mid cap 400 value. Value stocks in general have not been a good investment for the past 20 years. They've drastically underperformed the technology and or growth stocks. So, I don't know, this is like my least favorite pick of Dan Now's suggestions for this year. I thought it'd be interesting to go over some of our watch list. We put together a watch list just to keep track of the news stories on each one of these stocks, and I ranked them by how well they're doing so far this year. I looked at the ones doing the best, and I noticed that they all have a theme. And the themes are a lot of them don't have tariff concerns because most of them are based in the USA. So if you have a company like Verizon, where 90% or more of their business is in America, then you'd have a tendency to not have fluctuations around tariff talk. So we have that T-Mobile US is like 100% United States based, so that they don't have tariff concerns. You have financials, most of the financials don't have geopolitical concerns, and they have all the benefits we just talked about. So the ones doing them best are doing business in America. They're financials, healthcare, U.S. telecom, and gold. So um, so let's look at some of the ones that did the best and why they're doing the best. T-Mobile is taking market share. We've been saying that from AT&T and T and Verizon for many years now, and they're aggressively um, putting ads on TV and for trade-ins for Apple iPhones. And Meta is doing it. They're up 20 days in a row. That is a record. That's not a record for a stock. But I'd say going back 20 years, there hasn't been a stock that has done that. So they have momentum in a major way. And the key reason why Meta is up this year is they're one of the only companies that's showing a return on investment for the AI spend. So they're actually using AI to monetize profits for their businesses. So they do, and they're cost cutting. And so that's the major difference between Meta, which is up 23%, and Google and Microsoft, which are down 2%, is that Google and Microsoft are spending like crazy, but not really showing a benefit for the AI spend. So let's look at some of the other ones. Starbucks has a new CEO that came from Chipotle. So they have a lot of momentum around um, this new CEO, how he's going to change Starbucks to be similar to Chipotle. Costco is up because it's a US based, primarily US based company with most of their sales in America. They have residual income from their um, member fees, which is 90% of their what they make. So they have a very um, safe residual income with most of their members renewing every year. Um, Walmart's up. Why would they be up today this year? Um, they just have momentum. Their stock has been going up in a straight line, and they pay a dividend, and they're considered a safe investment. They're mostly America based, so but they do have a problem with tariffs. If they start having to deal with multi-country tariffs, they do a lot of importing for their goods. So that might be one of the ones I worry about this year. JP Morgan, of course, we talked about how all the banks have been ripping with deregulation promises, and um, Abbott, they resolved one of their lawsuits, and it's not like a baby formula lawsuit. And so this could be a return to the mean where all it's been down for 2 years, and all of a sudden it's starting to return to a mean. Um, Waste management, they're primarily an American-based company with most of their sales in America. They don't have to worry about tariffs, so it's more of a safe, consistent trade over time. And they have a duopoly with Republic Services. So uh, AT&T is up 13%. They pay a dividend, and Trump's goal for the new administration is to reduce the 10-year yield. And if that happens, a lot of people are going to be demanding a higher yield on their investment, and AT&T could give that. Verizon, okay, so that was a good little exercise of why stocks are going up. Eli Lilly just had a great earnings report, and they have a lot of momentum around their weight loss drugs. And mm, okay, that's all I really have to say for that. Um, Tesla is down 6% this year. There was they basically went up a bunch after the election due to Elon Musk's work with the president. But recently, that momentum is dissipating. So it's down a little bit this year, but it's still overvalued. Um, okay, so let's look at some more of our um, charts to be looking at. This is Meta, Facebook, the old Facebook. You can see that it is overbought as any stock that I've ever seen. You can see it's been going up every day for the past 20 days, and it's definitely overbought. So this isn't a good time to really pile into this one. Usually you want to buy stock like Meta whenever it's down at the bottom of its trend line, like here, here, or here, and you see a time when it's at the bottom of its trend line and it's oversold. So that would be a perfect time to buy it. Or maybe right here. So right now is like the time you don't want to buy it. Let's look at another stock. It's Google. Google is kind of the opposite. You can see its stochastics are at 10, which is really low. It's near the bottom of its trend lines, the black trend lines. I kind of mark the top of the chart and the bottom. I try to connect the dots, and it's close to the bottom. So this is a better time to buy Google than it is to buy Meta. And Microsoft is also super oversold. So we have a lot of the big tech stocks, the Mag 7. Um, there's one person this week that classified them as the Lag 7, LAG, because they're lagging the market. But in general, each of these big tech stocks are growing 17% a year, 15% a year. So if they mark time or don't go up this year, they're still over time going to be growing 17% according to current estimates. So that's why I continue to hold them, even though they're kind of out of favor right now. All right, so this is a really fun time for me. Um, this is a time where the hedge funds and mutual funds, any company, any corporation that manages more than 300 million in stock, you have to report a 13F, which is the what they own, what that company is managing, what their current holdings are. So, um, so I thought it'd be interesting to go over some of the current holdings of some of the famous people in the stock market. Okay, so the first company is Berkshire Hathaway, and you can see that they haven't sold any of their Apple. You see, recent activity is none. They're still selling their Bank of America, and you can't really you can't sometimes Warren Buffett sells out of stocks um, at the wrong time. Like he was selling the airlines whenever there was the pandemic, and that was the absolute worst time to sell the airlines. So you can't make too much out of when he reduces his position. So, but I have to keep it in mind though. So you can see like right here, he reduced his Citigroup 73%, and we saw just today that Citigroup is up 20% this year. So he doesn't have the best timing. Um, so you can't really follow him exactly. But let's look at what he did add to. He added to Sirius XM Holdings. He added to this Pool Corp, but he kept his Apple position at 28%. That is very encouraging because I own a lot of Apple. Um, all right, so let's look at some more. Let's look at some of the common themes to what he owns. He owns a lot of banks. He owns a lot of oil companies and financial and insurance companies. So those are his themes. Um, and he's kind of old school. He looks at 20 years in the future and kind of thinks, is there still going to be demand for this product? And does this company still have a moat? And that is why you have these holdings here. Let's look at some more of the top holdings of famous people. This is Bill Ackman's Pershing Square Capital Management. Um, let's see what he did. This was very interesting. He bought a big position in Nike. This is a brand new position. And Nike, we found it was a little bit overvalued. I wouldn't invest in it. I'm very surprised that he did this. It's currently at $75 a share, but its PEG ratio is still over two. They're not growing very fast. So I like to see what he's going to do with that. But let me see. You can see he still holds Google. He owns both both versions of Google, and so Google is one of his top holdings. Let me see, and 16%. Yeah, Google is actually his top holding, Alphabet. And I never could make sense out of Brookfield or QSR. Um, so okay, we'll have to come back and look at some of these and find out why he's investing in those later on. Um, Bill and Melinda Gates Foundation Trust. Let's look at what they own. Of course, they own Microsoft. That was donated by Bill when he started the company. Um, Berkshire Hathaway Waste Management. He likes to buy companies that are dominant in like have monopolies. You can see Waste Management there, duopoly with the Republic Services. You have Canadian National Railway. They have there's only a couple railroads in the North America, and they're not building any new railroads. Let me see. So Walmart, he has Walmart, and that's been ripping recently. And hmm, these are all smaller positions. Okay, so he hasn't done a lot of activities. He's basically a buy and hold kind of investor. So he's recently sold a little bit of Berkshire Hathaway and a little bit of Microsoft, but those are huge positions anyway. So maybe he's just reducing his, um, trying to get a little bit. He doesn't want to put too many eggs in one basket. Let's look at David Tepper. We mentioned him a couple weeks ago. He was loading up on Chinese companies, and you can see that his top pick is Alibaba. Back a couple months when we were looking at this, we said, "What the heck was he doing?" He saw that Alibaba had a ton of cash, and they they're a leading e-commerce company in China, similar to Amazon. Only recently they've they had a catalyst. So Alibaba has turned into an AI company, and because of that, they're getting some attention. And it's really hard for companies and foreign companies to get a catalyst because there's a lot of negative vibes around tariffs and the Chinese government and how they control the Chinese companies. But he had a conviction. He says, I'm all in. He bought Alibaba, he bought PDD, he bought JD. He said, I'm buying all of them. And he did. And look at that. And they're starting to go up recently. So you can see let's look at our stock screen for this week. You can see that the stock screen, if we look at the PEG ratio, you can see some of the best PDD is 1/3. Its PEG ratio is 0.3. That means it's 1/3. Um, it's 3 times undervalued. Let's look at some more of the Chinese companies. We have, let's see, hold on. Okay, we'll find. Okay, so we have JD here. Let's look at JD. There it is right there. Okay, so JD is 0.6. So it's 1/3 undervalued. So so it's 40% undervalued. So this is what David Tepper was saying a couple weeks ago. I wasn't too sure if he was right or not, but now all of the Chinese companies are catching a bid. So that was a good lesson learned. We're going to follow David Tepper next time he says something. So you can see he's FXI. That's the Chinese. That's like the S&P um, in China. So KWeb is another tech ETF for China. So Baidu is another. So he basically half or more of his positions are Chinese now, which is very interesting. Let's look at the next one. This is Chase Coleman from Tiger Management. You can see a lot of the Mag 7 in the top 10. You can see Apollo Management. That was in our screen too. Let's see, Apollo APO. There it is right there. So you can see that it's 1.4 peg ratio. So it's 40% overvalued. But this company is a company that does they help smaller companies grow and become public companies. So that they'll be helped by the Trump administration wanting to deregulate and to allow companies to grow without regulations. So let's look at some more of their top 10. NVIDIA, we have Amazon, we have Microsoft, Google. Okay, and Eli Lilly, that's a common theme with a lot of these also. Um, all right, that was good to look at that. Leon Cooperman, he's kind of he thinks differently than most other money managers. He goes for um, companies that are mid cap, some are large cap, but um, most of these ones in the top 10 you've never heard of. We see another Apollo Management we just talked about. Um, all right, some of these are eclectic, companies that are not in the top 10. We have okay, so I don't understand most of these companies. So we'll go to another guy, Seth Carman, Willis Towers. That's a real estate play. So I guess he's thinking um, kind of opposite. He's the things that he's choosing right now are kind of opposite of what's working in the past. We have real estate. Um, we of course Google. We know that. Um, CRH, they're a company that does um, materials for building. So that's a real estate play. We have Ferguson Enterprises, a restaurant company. We have, I'm not restaurant, restaurant brands, materials. Okay, so he thinks materials, building, and kind of real estate is the theme that he's going on. So that was a really good um, look at what he's doing. Nelson Peltz, he's like an agitator. He likes to go into companies and make changes. And he recently Nelson Peltz he recently did a lot of business with Disney, trying to shake up their company to make it better. And let me see, Janice Henderson, GE Aerospace, Wendy's. I don't see any themes here, really. So what this guy does is he sees inefficiencies in companies and then he tries to get a board seat and make changes. Hmm, I guess he can. I don't really have any comments on this one though. Okay, David Einhorn. He's held this Green Brick Partners for a long time. Let's look at what he's added recently. CNH Industrial. I think CNH Industrial does CNH and Iron and Tech. Okay, so they're the force between. They're a building company. They're let's see what they do. They're an Italian American multinational corporation, but controlled. Let's see what they do. All right, they're a building company, definitely. So their infrastructure, maybe this guy bought that for a theme of America's starting to build and bringing things back to America. All right, so let's look at some more things that he owns. He owns a good portion of gold, 2.5%. Capri Holdings, they make purses and fashion. All right. Okay, let's look at what Michael Burry, he's the guy that the Big Short person. He predicted housing prices in 2008. He had Alibaba as the top holding for quite a while. We've been watching that. And finally, Alibaba is up like 40% in the last month or so. JD.com, they're a Chinese company. So he saw that what David Tepper saw as opportunities in the Chinese market. I guess you have to be patient and wait for maybe a catalyst like AI to bring them out of um, their rut that they were in. PDD is another Chinese company. So this guy kind of is very similar to David Tepper's top holdings. Okay, let's look at Daniel Loeb. He chose, look at this, he added 22% to Meta, which is up another 20% this year. And he reduced Microsoft. That's interesting. And he reduced Live Nation. And so he bought more of Flutter Entertainment. I think I'm not sure what they do. I thought they did something like a online pictures and videos. And CRH, another person adding to CRH. That's CNH. That's something different. Okay. Okay, let's look at Contrafund top holdings. Let's look at what it's adding more to and what it's decreasing. So it reduced its exposure to United Health. Um, it's been going down like a lot recently. And it's decreased its Exxon Mobil. Let's look at what it increased. It increased Alphabet because this is an example of Alphabet's been down recently. Maybe that's why it's adding to it. Um, decreased decreased Regeneron, and it decreased Vertex Pharmaceuticals. Vertex Pharmaceuticals actually, they came out with a new drug recently that was approved for um, pain medication. So there hasn't been a new pain medication in 20 years, and they were just approved. So maybe he's double thinking, and maybe he made a mistake in selling that. Okay, let's look at Fidelity Magellan's top holdings. You can see NVIDIA is still their top holding, and it's 7.8% of their portfolio. Microsoft is next, Amazon, Meta. So all the top holdings are the Mag 7, and you have Eli Lilly right behind it. So it's Fidelity Magellan doesn't turn over their portfolio very often. And whenever you see that it first bought a stock, a long time ago, then you know that stock is probably going to be a good holding going forward because you can hold it for a long time without having to sell it. And mutual funds are penalized in a way whenever they sell stocks because you have capital gains at the end of the year for the people that own this mutual fund. So most likely they're going to continue holding these top stocks, for another couple of years. And I think they just added Eaton Corporation. Eaton is a company that they actually make a lot of money doing infrastructure for the data centers, for AI data centers. So maybe that's one we can review in the future. Here's another. I'm looking at the largest mutual funds. in the country, American funds. You can see that Meta is their top holding also. Microsoft is the next best holding, but you can see that Microsoft has not done so well recently. Amazon, Broadcom, NVIDIA, so they have the Mag 7 or Mag 8, whatever you want to call it, in the top 10. Apple, Eli Lilly. So, and when we're looking at the changes in these mutual funds, you can see they haven't changed a whole lot in the past 10 years. And there's a very good chance then, if you keep following, the top holdings of these mutual funds, that you'll do pretty good, if you buy similar holdings for your portfolio. And even if you keep track of these, and when one of them drops, like NVIDIA did a while ago, like 2 weeks ago, when you see a stock like NVIDIA drop 17%, and and you realize it's not on sound news, then you might want to put a little money into that, um, so you can establish a position. So you see Netflix, Apple. Okay, these are all the big tech stocks. So um, that kind of confirms whenever almost every the largest mutual funds hold stocks that we're following. That adds some credence into holding it for a long time. All right, so one more we'll review, and that's about it. Um, okay, this is T. Rowe Price Communication and Tech Fund. I chose this one. It's just like it's one of the larger ones in the country. Meta is its top holding, and Microsoft, Amazon, Broadcom, almost the same as the last company. So that's pretty amazing. Mag 7 for even though they're not performing as well this year. Let's look at the earnings that are going to happen this week. There aren't any real big earnings reports that are consequential that are going to move the market in the coming week. You have um, very small companies reporting earnings, so nothing's going to really move the market. We have Walmart, that could tell us something about the consumer, but that's about it. All right, so let's look back at this China DeepSeek news story from at the end of January, beginning of February. You can see the first day it came out, I said, I tried this DeepSeek app, and I asked it, who's in the Super Bowl, and it didn't even know. It said its data only goes back to October 2024. So I said that news story, that sell-off could have been a fake, move in the market. So there's articles that have been coming out since then. Don't panic, NVIDIA will actually be a DeepSeek winner. We have, people saying that load up now for the earnings report. So whenever you're a long-term holder in the stock, and you have to be willing to sit through volatility, because if you don't, you could be easily shaken out of the market. And I think they call them nervous Nellies. If you allow just any news story to make you sell your position, then you won't get the returns um, of the mutual funds that have held their positions for like 20 years. All right, so that is what I had to say for today. I hope that was useful to you, and I'll see you all next time.